There are so many altcoins out in the crypto market, and you may get lost on deciding which coin to buy. Well, I'm here to show you how to decipher one coin from another and how to find massive potential. Hello everybody, and welcome back to another episode of the Crypto Compass, your guide to everything crypto. Let's dive into altcoins, and to jog your memory, an altcoin is any coin outside of Bitcoin. Some people consider Ethereum not an altcoin because it's such a big coin, but technically it is. But I'm talking outside of Bitcoin and Ethereum are all the other altcoins. These coins are considered very volatile in the crypto market because there's less liquidity flowing through them. And a lot of these smaller and newer altcoins may result in rug pulls or scams because they are new coins put out just so the creator can make $1. It's very important that you know what a coin is doing before you get into it, but outside of the fundamental analysis, you need to get into the technical analysis, and that's what we're doing today. Most of my videos that I've put out already cover fundamental analysis, which are the basis of what a coin does and what value it brings to the space. But now we're going to jump into some charts and look at some tokenomics to decipher one coin from another to help you recognize gems. When looking at the tokenomics of the coin, the main factors that pop up are the market cap, the supply, and the volume. The market cap of a coin can be easily calculated. The calculation for a market cap is the circulating supply times the price of the coin. A low market cap coin would be less than 10 million. A mid cap coin would be from 10 million to about 200 to 300 million, and a large cap coin would be more than 500 million. And the risk associated with these coins goes by the value of the market cap. So the lower the market cap, the higher the risk. And that's simply because there's less money flowing in there. So maybe there could be no money coming in and that price just stagnates or even dips when people sell and get impatient. Or it could be a true rug pull where the founder and creator of that coin just pulls the liquidity and takes all the money out and the coin goes straight to zero. This is also why I urge all of you to stay vigilant and stay in the know of a coin, because at any moment that coin could dump or pump. Now the next tokenomic that I want to focus on is the supply, and there's two factors that come into here. So there is circulating supply and total supply. The circulating supply is the total amount of tokens that is available on the market currently, and the maximum supply is the maximum amount of tokens that can ever be created. Normally the discrepancies between the circulating and the maximum supply have to do with locked tokens, or tokens that are held by either the team or locked in staking or farming. But you also want to double check and make sure where that money is locked, because if there is a big difference between the circulating and the maximum supply, then you need to be aware of that and be vigilant, because that could be a red flag. And now we move on to the volume of a coin. The volume is the total amount of money that is coming into this coin during a certain period of time. Normally you want to look at the volume in a 24-hour period. That is a good time frame to start with. And when you see a lot of volume kicking in, you know a lot of money is flowing into that coin. And if the coin isn't changing price immediately, you know it will eventually, because as soon as the volume kicks in, the price is going to skyrocket. And that wraps it up for the tokenomics of a coin. So now let's jump into the charts of a coin. When analyzing a chart, you need to know where the highs and the lows are, but also where that coin is sitting at currently. So this is where we dive into the concept of all-time highs and all-time lows. The all-time high is the highest price the coin has ever reached, and the all-time low is the lowest point that a coin has ever touched. Ideally, you want to get into a coin that is very close to its all-time lows and down greatly from its all-time highs. But you don't want to just dive into any coin that is very low and down 90+% from its highs, because that coin may be done. It may not be building anymore, the team may have disappeared, and the coin is literally just trending to zero. So that's where the fundamental analysis jumps in. You can't just go all in on the technical or all in on the fundamental. You need to have a 50-50 split and know that it is technically strong and fundamentally strong. Another technical point are the phases of a coin. So there are accumulation phases as well as rising phases and falling phases. During the accumulation phase, a coin hits highs and lows in a very tight range. So that is the best time to buy a coin, because that is usually after a coin comes down from the falling phase. And on the opposite side, after the accumulation accumulation phase is the uptrend. So after it's been accumulating in a tight range for a very long time with steady volume, the coin is ready to break out and head to the upside. Additionally, there are chart patterns that you may look at, such as head and shoulders or cup and handle, but me personally, I don't focus on those. I use those as additional indicators, but my basis is very simple because I believe in the concept of less is more. Now that we have discussed the technical analysis on the charts as well as the tokenomics of a coin, let's dive into some coins and look at some examples. I want to start with the coin Silo. Silo is a DeFi project very similar to the big project Aave, but the difference between Aave and Silo is that Silo keeps their pools individually put in separate silos rather than Aave having their whole liquidity pool in one big pool. So fundamentally speaking, I like the use case of Silo. Now diving into the tokenomics, Silo is currently sitting at less than a $14 million market cap, and that is very low. That would be considered a low-end mid to a high-end low market cap coin. And the current circulating supply is 250 million coins with a maximum supply of 1 billion coins. So I already like the tokenomics. And when we are talking about supply, I ideally want to look at a coin that's less than a billion token wise, because the lower the supply, the higher the demand. Now looking at the volume of the coin, you can see that it is very low. On average, it's less than $100,000 in 24-hour volume. Normally that would alarm me, but we are in a bear market and this coin has been stuck in accumulation for a very long time. So what I would be looking for is when we see a spike of volume in this coin and we see volume go into the millions. That would be a great buying opportunity, but ideally you'd want to get in before then. And just looking at the chart, you can see that we've been ranging in this tight accumulation range for a very long time. This chart looks like it's primed and ready for a breakout whenever the bull market does hit. And looking at the all-time high and the all-time low, we are down more than 90% from the all-time high. And we are still greatly up from the all-time lows, but the all-time low is from when the coin first launched. So this coin still has a lot of potential. Overall, I would say the risk and reward here is really nice. And these are the type of coins that you should be looking for. Now, the next coin that I want to jump into is API3. And API3 is an oracle, very similar to Chainlink, but they offer different functionality. So fundamentally, oracles, I believe, are very strong in this space. Now, the market cap of this coin is higher than the last one, sitting right around 100 million, but the supply is also a lot lower, sitting right under 100 million. The circulating supply is 95 million and the total supply is 126 million. So the difference is very minimal. So in this case, you know that a lot of the supply is just given to holders. And it's also nice to see a lower supply that is in the hundreds of millions compared to the billions. Additionally, the volume is much higher on the coin, which it averages from 5 to 10 million in a 24-hour time period. So already off the bat, I really like the tokenomics of this coin due to the supply and the volume and the low market cap. Now looking deeper at the chart, you can also tell that this coin has been in a tight accumulation range and has been down from its highs for a long time now. The accumulation range is very similar to the previous coin we discussed, and a lot of these altcoins are currently sitting in this range right now. Looking at the all-time high of this coin, you can see that we are around 90% down from the all-time high, and at the same time we are only up around 20% from the all-time lows. So this coin is really sitting near its all-time lows, and it could easily hit its all-time highs or higher during a bull market. So again, we have another coin that we can be highly interested in because this coin has great tokenomics and a good looking chart, and just based off the all-time low and the all-time high, you know where this coin could be headed. That's all for today's episode. Thank you all for tuning in, and I hope you learned a lot about the technical side of coins. And if you are looking to learn more about technicals or look into more coins, reach out to me and I can get you set up in my coaching program. I can guide you through all these coins and much more and really break down the charts and tokenomics to a better degree. And before you leave, don't forget to hit that subscribe button, hit that like button, and hit that bell button so you don't miss another one of my videos. I'll see you guys in the next video. Peace.